Morning. It's always a pleasure speaking with you. I wanted your view first on what the near term could look like for the Indian markets, considering that we hit a new 52-week high, but around these levels of 8,900 to 9,000, we've seen a lot of resistance in the past as well.
Sure. So, I mean, we're basically seeing the market now move into resistance provided by the 2015 and 16 highs that we saw in September and March respectively. That plus the momentum indicators that we're looking at on a daily basis overbought. And if you put that into perspective with the global scenario that we've seen some accelerated gains, is that in the very short term, we're likely to see the market pause and hesitate at this point. But I think it is only a short-term hesitation rather than a major reversal. So the broader uptrend that we've seen unfold of the December lows should remain intact for the Nifty.
Okay. Morning, Lawrence. And therefore,
Morning.
what would you look at as contours now? And if you were to draw the Nifty chart over the next 6 months, where is it headed?
So we've got, we ultimately believe that this 9,000 area, we will break through that, make new all-time highs. And we've got upside targets initially at 10,300. But they do stretch up to 12,000. So we do think further gains will be made post this short-term pause, with 10,300 being our first upside objective.
That's the target for 2017?
No, so if we look at it, I mean, essentially we should see at least 11,500. But we don't base our projections on time base. So this is the end of the year objective. Once we break through levels and extend the uptrend, those will be the next 3 target levels that we'll be focusing on,
and
irrespective of time horizon.
Okay. What's the kind of bottom that looks protected?
Yes, those the downside. The December lows are significant. We shouldn't be breaking below those lows on any that we see over the coming months if we do get a more significant pause and peak in global markets. So December 2016 lows would be the critical support zone for this uptrend.
And Lawrence, I think the line is a bit scratchy. Can you just repeat what you said, that the December lows will be held, you think?
Yes, I do think they'll be held. That's a critical support level for the uptrend that has been developing in the Nifty market. So as long as that remains intact, we'd look for those target levels that I mentioned earlier.
And to get to this level of 11,000 that you've been talking about on the Nifty, what kind of support are we getting from which quarters? Reliance has started to perform really well. It's already up 16% this year. Do you see support coming in from there? Or do you think that banks could do most of the heavy lifting?
Yeah, for us, when we've seen the Indian market break out, the key sector having the sustained breaks at the broader index level has been the banks. So we are highlighting this, the NSE Nifty Banks Index as a key driver to a sustained break through the 2015 and 16 highs. If you look at that broader index, again, you're testing that area in the short term. So look for some short-term volatility around this resistance zone, but ultimately we think we break through that that point and really head up to the 32,000 area on the Nifty Banks Index.
Okay. Lawrence, separately, have you looked at the metal charts, the base metal charts and the crude charts? What are they telling you for the 10 months of 2017 that are left?
So at the spot level for those commodities, obviously crude is still holding in a very tight range between essentially $52 and $55. But as long as you remain above $52, I think you can still get the benefit of doubt to last year's breakout. So 52 is quite key on that. The base metals is a bit more of a mixed bag. So we've seen quite a bit of dispersion as far as performance goes. We've had Ali break out recently. We got copper still in the trading range around the 270 to 240 area. So it's a far more of a mixed picture within the broader base metals. And I think that will continue through the rest of the year. That'll be quite selective and rotational within the commodity basket.
So is there, just to follow up to that, is there more scope in the metal stocks in our own markets? Because last year was a great year for metal companies, and this year there seems to be some follow-on buying with most of these stocks like Tata Steel up about 25%.
Yeah, I think in the near term, that's a sector I'd be taking profits in. A number of our indicators are showing that particularly in steel, iron ore, and the coal side, is that the momentum indicators are lagging behind price action. And that's typically a sign that the uptrend is maturing. So I would essentially look at taking profits on the metal side, and I don't think they'll be the key driver driving the Nifty to new highs. So I'd be taking profits on the metals and mining stocks.
Okay, would you have a view on the dollar index, that is the DXY, a view on dollar rupee for the next couple of quarters?
Yeah, I think you've got to be quite careful because the dollar index is only 6 currencies that you're looking at plotted versus the US dollar. So if you look purely at the price action of those 6 indices represented by the DXY index, you had a breakout in 2016 when we pushed through the 99-100 resistance area. That breakout is still intact, giving us an upside target of 106. So against those 6 currencies, I'd expect further US dollar strength. But if you then start to look at the rupee, for example, but if you look at another currency, you've actually got quite a stable picture. So the dollar strength is selective. That's the message that the price action is telling us. And for we well in a trading range consolidating. So I don't see any significant rupee weakness here. And I think the trading range remains intact. But if you're asking purely on the dollar index, that dollar uptrend is intact, and I'd expect further dollar gains.
Okay. Before we let you go, Lawrence, just a slightly broader question on how the year could shape up for developed markets versus emerging markets, because so far both are performing in quite a decent fashion, with both US markets as well as India sitting at 52-week highs. Where do you think the outperformance could come from?
Well, I mean, I think the current scenario is that we are seeing a high momentum uptrend across a number of global markets. So it is a markets that are in unison. As this trend continues, we'll see the market narrowing into certain themes. So we will start to lose some of these weaker markets as this trend resumes. So I think, the trend that we currently got should continue into June, July before I think we'll see weakness and some of the weaker markets starting to roll over. So as we go into the middle part of the year, I think these current uptrends that we have do continue into that period.
Okay, fine. So the trends continue till July. Thank you very much, Lawrence Balanco.